All right, guys, let's look at the anatomy of trading. Trading is about buy and selling. And as opportunity present to you, not buy and buy or sell and sell, except otherwise. Remember, trading has 3M: man, money, market. Man, money, market, market, money, man. Man is at the other end, markets at the other end. Then man struggling to get the money from the market set trap to get the money from man. That's what we have: market maker model. So there are people who are in the other side, who align with the market and set the rule. And many people fall victim of the rule. Let's look at the market. I will trade different strategy. I trade Felix P&L trading strategy. You want to look at opportunity where it's been presented. Let's look at this DXY. And I've said the opposite of DXY is Euro USD, or pair of currencies to USD. And what happened? When DXY is massively moving up, then you want to see Euro USD massively moving down. When Euro GPY, when DXY is moving up or moving down, you see Euro USD moving up. Let's quickly look at this market. This is a daily time frame. I always have my key level marked or important area of reference marked. This is what we have. Now, this market had come and exhausted this price. I wouldn't go into explaining what exhaustion is all about, but DXY came and did this exhaustion here, which is like a sweep of liquidity on a higher time frame, and that creating a different daily range. Then we have continuity on the market moving up. Here we have a high, a low, and a high, and a low, a high, and a low, a high, and a low. And of course, reference point of the market traveling back to. Then sometimes we step down to lower time frame, talking about the powers of top-down market review. And that was what made us to mark this place. And how that happened is that to go to 4 hours, or 4 hours or something, a different thing together that we got here to see the market to return back. I can't really fathom out what makes us to get this place marked, but something happened that we have to mark this point as a point of reference. I can't really give what made me to mark this point as a point of reference. All right. Yeah, so now if that was marked, honorably, the market returned back to it and get respected. And here we have a double top right now. So what's going to happen? So go to dollar time frame. Now go to Euro USD. And what's Euro USD playing out right now? And Euro USD playing out otherwise. Now looking at Euro USD, this is a downtrend because the DXY is having an uptrend. You have a high, you have a low, you have a high. All right, you have a low, you have a high, you have a low, you have a high, right? This is an internal structure. Now, this is the low. Now, the market move, this is an internal structure. This is essentially the high. And then we have the low. Now we have a high. Now, of creating this, we should be breaking down below this point. But in between, they can present an opportunity for you to buy, which makes us to have this point as an area of interest. And it is referred to as order block. And now this order block play out on a daily time frame. And what really happened? We had the power of 3. Now, if that is the case, the market to be bouncing up to an extent. Now, this is what makes us to want to travel back to a lower time frame. If you go to C2 on DXY, you're going to have a 4-hour time frame, and we have the same thing, a double top actually manifesting there. But you want to see a different thing change of the market structure, and sometime if you play out that way, you're going to look at this is a rejection already, but you want to see a market structure shift. We have a high, we have a low, then we have a high, we have a break of this low. So here, high, a low, then a high, right? This is a high, this is a low, this is a high. Now, this high created low here. Make a lot of sense. We create another high, and then this is a high, and this is a low. Here, we have this market shifting. This is 1 hour time frame. That means the market need to travel down, as it were, and have this point. And then that's the divergence of the DXY and Euro USD upside down. And then we have go to 30 minutes. Then you're going to find similar thing occurring, high, low, then change of character, return back to the origin, probably fair value gap that the market is playing out. So you want to have the market traveling down, then you can have what we call an overlap here. So you could be targeting that if it's an instrument. And that takes us to travel back to Euro USD and then be finding a moving up of the market. How? You have marked this point as an area of interest and market travel back to it. So let's quickly look at it. This is 30-minute time frame, and this is a low. That's a break of structure. This is a high. And then we have another break of structure down here, and this is a high. And then this is a low. Now the whole thing, change of character, break of structure, a change of character externally, and we have a return back to this origin, and that marked the entry of this market. But to get it more sniper, you want to go to 15 minutes to be able to identify a sniper entry quicker than expected. And that's going to make you to do the same analysis and do all the necessary things. Sometimes we'll go to 5 minutes to be able to find this entry as easy as possible. I may not do detail of what I want to refine here, but if you look at it, all of these altogether to this point is still equally high, and then this is a low. But one thing happened here. This market created another high here, and then we have a displacement, total displacement, and then market rally back. Take out this. So you are waiting for this point, the market to return, which is a fair value gap, and the market push back here at this fair value gap, then you're forming your entry. So now what's going to happen? The market is still dialing, and then probably you can find a pushback a little, then to find an entry. I'm not going to go below this, but if you go to look at it on 1 hour, on 4 hours, even on daily, you are having a power of 3 that tell us sometimes people just take an entry at this point. So here, what's going to happen? I'm going to have the market return, possibly. It's very, very likely. And then, so you want to see the market travel up here. And that's one of the ideal things that you want to target in the market. Ladies and gentlemen, market is what it is, and then it can really die and do a whole lot of things. So, but you want to put your stop loss at the appropriate point. And exactly what played out on Bitcoin, we've been saying that Bitcoin was bearish while we're here, and then the market again now is gradually going towards a point where we say about 74, 73, and $71,000 for Bitcoin, and that is gradually happening. And then this is how the market behaves. So you want to have much knowledge on how to leverage on the market. This is what we do. And that's why we encourage people to join Plan B Express Cash Flow Solution Club. And then you're going to have access to all of this, not just the training, but access to Signal that are going to help you. What of gold? Gold has done just a basic. And then if I could just flop up to the gate now, I probably could just take out all of this. All right. And then take out all of these to look at gold inwardly and do detailed analysis on gold. What do I do? This is a daily time frame. Make a lot of sense. We had a power of 3 played out here. And then we could look at what is gold. Down gold from starting from here. Then we have a break of structure at this point. This make a lot of sense. We have a break of structure here for gold. And if we don't really have that, then that means we have different origin put together here. We have the major one here. And we have this equally, this center one here. So if you're going to take one after the other, because the market will travel just back to this or to really total base, then we have this as a mitigated area. Then we have the brief one below here as unmitigated. So we're going to find this. I'm going to change this color. Now, why do I do this? I just want to identify where potential entry can be formed. And then we have this on a daily time frame. And then move up again, the break of structure. Now we have this one. It's a breakout structure. Now I'm going to go 4 hours, not wasting too much of my time. But because going to 4 hours, I'm going to do something. What was the previous day high and low is very, very important. And I go to this point. Ladies and gentlemen, I'm looking for the high of yesterday and the low of yesterday. One thing beautiful just happened, that the low of yesterday had been taken out. Now we're looking towards what would the market do next if the low of yesterday have been taken out. But we have towards a point that is a support or demand zone, which is this, and we have another other block that has not been mitigated. But are we going to get mitigated at this point? I think it was mitigated. Now I'm going to go back into a lower time frame, which is going to be 4 hours. Quickly, I do that. I go to 4 hours and then narrate other event and things that could play out. Remember, sometimes I do more beyond this, but I mark more pivot point. But I'm not going to do that now into getting too more detail about this. So I mark this pivot point and then go here. Yesterday had been swept. Are we going to have a return back to this point? Time will tell that. Then I probably look at 4 hours itself and to see a breakout structure here and a breakout structure here. And then what happened? The market is actually tilling and then take it a kind of sideways move eventually. But it still shows that this market is coming from up and then trying to rip down. And I go to 1 hour. Remember, I'm just doing a paraphrasing into days, but look at it. This could form a kind of form of support region as the market till and take out all the low liquidity here. But we still equally have a liquidity here. I think that will equally swept. So that makes this other block that has not been mitigated. Or if you work on 4 hours or 1 hour right now, you see this point and here, a breakout structure. Now this is another origin. Is it possible that the market return back to this origin and get it mitigated? Now time will tell, and then you want to get some confirmation if this had been mitigated before. Now it's forming a support. Will it bounce from this support, or we're going to be struggling and bounce back to this point and then have another dimension of the market? I'm not going detail, just understand I'm paraphrasing. And then moving down to this point, we're having the reaction from gold right now, making this point a demand zone where the market actually have been touching and bouncing, but this time around, you have swept below here. So what do we have? Are we going to use this support zone or we're going to use down below? Time will tell. And then we scroll down to 15 minutes. Perhaps this will be my benchmark and get into this my benchmark. There are things I want this market to display to convince me that we're bouncing up or we continue going down. And as it were, so I go to 5 minutes sometime. Then we have other tools that can help you if you do not have detailed understanding of how the market actually works. Then we have some point called pivot point, which I go to in 5 minutes to tell you that this market is still rejecting from up to sell down. It has tried here and then it has moved up here. Look at the massive sell from this point to this point. I like you to know this is 100 pips, this is 200 pips, and this 300 pips as fast as possible. Oh, yeah, you hear me. So what should I do right now? I do nothing because the market is at the point of no relevance. And then here, probably now this is telling me to buy. Probably I want to wait to see how the market will that react above this point. Because if I buy here now, I'm going to use my stop loss below this point. Let me just show you an example of that, how it can be achieved. And then already get and calculated what to be your stop loss if this market actually play out, but you are working because this market is still having more sell pressure because you're rejecting at this pivot point. And that's one of the things and powerful tools we'll always use to take profit. Look at where this one sold from and down to this point. That was massive. Even if you don't sell down to this point, chances are there that after you sold from here, you are taking 100 and something pips here to this place, 200 and something pips, then rally back here. Excuse me. So as the market rally back here again, that's another buy opportunity. Remember, From this point to this point is 100 pips. From here to here is 100 pips. Altogether, give 200 pips. This is another selling pressure and marking a signal for me to take an entry. From here to here is 140 pips. To this point is 240 pips. You can see that. And then the market signaling around this point, and we have all of this journey all at 100 pips. And then this is about 50 pips. Remember, these are our rule of 50 to 100 pips challenge in the strategy, and it's actually working massively. And this is what you have. So if we're going to have that, I'm going to go to a broker and then check what other thing can I take. Let's quickly look at it. If I'm going to find a trade or find a little entry to take 50, 100 or 200 pips as it were, and that's our strategy. And I'm going to call XAU USD, and to see if there's a buy opportunity, I'll have to go down to 5 minutes. Now, this is not a place where I draw all of those stuff here. It's another point. Now, when I go back to 5 minutes, we're going to have a report of buying or selling. But unfortunately, if you look at it on 15 minutes, you know that this market, the energy is poor going on because all the support level here had been taken outside this liquidity, probably that just swept now. That could give you some level of, attention. If not, you want to look at this point and then let's look at them and then say, hey, you know what? This market have a point here to travel back to. I'll quickly change this one to make it more thicker and all of that. And then if I'm going to do it soon, I'll push it up to this point that the market will come back to 401 or sweep the liquidity below before they can buy back. You can see that. So that means the idea of buying may not actually work because we have had series of move and then the break, and then this is another break. So if you have that, you go to 5 minutes. What are we going to find? You will find some false signals from 5 minutes that can actually hinder you. But what's happening? We're having more down close candle, up close candle. Now we're having more significant down close candle. That may motivate you to want to take an entry. And if you take that entry, how long will you stay? Probably you are staying to this point before another sell pressure will happen. So the best bet, you want to see how the market come down to this point. And if we go back to our analysis zone, you can see the market is actually struggling below a support point, which can pressure the down to get to another support line. And that's one of the things you want to do. Probably if we go back to check the Euro USD we had, then we can tell probably it was going to do. Now, but if we get to this one, and I'm going to take this one, and I say, okay, 0.01, just to experiment for you, I do this, and I say the stop loss is going to be below this line. That's about 4027 or something. And then I'm going to go here, go down to this point, and I put up this one, 0, and then say 3 and 4, 4, 2, 7. All right, that's going to be losing of $9, and I click on confirm. Then we want to find where are we going to take profit to. Probably we'd look at the profit taking at 4049 level to take the profit. Then I'll go back to the point and I adjust that here and I say, hey, you know what? This is this 4049 or 50, as it were. It's going to give you $13 if all things being equal. And then this is what to do. So at a point, this is how the markets of time behave. Then you're walking in. Now, ladies and gentlemen, you can see the profit is actually moving gradually. But of course, this is a pure scalping. And then, but you can do some massive stuff. Remember, if it was taken from here to here, it's 100 pips. If you use 0.1, that's $100. If you use 0.01, that's $10. And you can make that. Then if you get over here, you're going to find another money at another different pips. Probably here to here is 100, and here maybe 20, and you're going to have 120. And then if you are 0.01, that's it. $12 is gotten immediately. Let's go back to the market and see what's happening. We're about $2 profit right now. I'm just showing an example so that you understand how we trade, how we analyze the market, and to take advantage of the market. Ladies and gentlemen, you want to be part of our insider group or Plan B Express Cash Flow Solution Club, don't hesitate. You can inbox us and then we'll put you through on how to be part of this amazing community. Thank you very much, and we'll have a nice time. This is trading, and it's very, very simple. You don't need too much struggle. Remember, market, it's about MMM, man, money, market, and market, money, man. Man is stretching, is struggling to get money from the market. The market is setting up trap to get money from man, which ought to do with liquidity. If you do not know where liquidity is, you are likely going to be the liquidity. Learn to spot where liquidity is to avoid being the liquidity of the market. But you can't eat your cake and have it. As long as you do not know where liquidity is, certainly you are one of the liquidity. So let's wake up, learn, build our understanding, knowledge, and confidence to navigate this crew of global financial market. My name is Peter Sifel Jimo. I'm the team leader of Plan B Express. Go to the comment section, join our free group, ask on how to subscribe to Plan B Express Cash Flow Solution Club, and you will really enjoy the best out of the financial market. Do have a nice time. Plan B Express, together we rise.